Hello, everyone. Another exciting day. Let's see. I do believe we are going to have a little, well, not a little, a very interesting show today. So, because we are going to let some folks in for our webinar today, I'm just going to read you a script. So, because I know some people out there have not been with us before, I'm shocked, but yes, it happens, Lori. So,
Yes, it does.
it does, right? Some people must hear how, especially for today's show, because today's show is out of the ordinary and I'm very excited for it. Well, my name is Sadie Uribe, and I am the media producer for the Los Angeles Regional Small Business Development Center. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. We offer no-cost services to the local businesses through funding provided by the U.S. Small Business Administration, SBA, and from the California Governor's Office of Business and Economic Development, GoBiz. The Los Angeles Regional Small Business Development Center network serves small businesses throughout Los Angeles, Santa Barbara, and Ventura counties. What do? Well, we offer no-cost business advising, meaning you can meet one-on-one via phone or Zoom to address your specific needs and challenges. And we also offer virtual training, such as, well, I wouldn't call this a training, Lori. I think I'm going to call this, what is it, Lori? AMA. Ask me anything, right? But
There you go. Yes.
that's what today's webinar is. It's not a workshop, but we're here to grow and learn. That's what we're doing. See, I'm already going with what our session is to help and adapt and grow your business, because we are going to learn some things today, Lori. So let me do a little changing over here so we can see your gorgeous face full on over here. Lori, we're excited. Tell us about today.
Okay, so I'm going to start out with my usual, going through what my upcoming webinars are, because I know I tell everybody to tune in, and Sadie's going to put all that information in the chat like she always does. Going to make a quick statement about the LLC 800 franchise tax fee, because I know I brought this up the last couple of weeks, still getting a lot of confusion on this. So this is just a quick, huge statement on it. So guys, if you think that you do not have to pay this fee on an annual basis, this is not correct. There was only an exemption for a time period between January 1st, 2021 and January 1st, 2024. That is no longer in effect. Now, the way that this works is the $800 is paid the fourth month, the 15th day of the fourth month when you incorporate. And then from then on, the 15th day of the fourth month, which aligns with your tax filing, right? And so you're paying ahead of time. You're not paying in arrears. You're paying ahead of time. So guys, if you didn't get a payment in, make sure you touch base with me. Let's get a payment made in, because they're not quite catching up on this yet. And if you don't pay and they catch up, they suspend it, then you got to get it out of suspension. It's an ugly thing. You don't want that to happen. I talked a lot about the BOI, the beneficial owner information document. That is a requirement. Anybody newly formed this year has 90 days. Anybody who was formed previously has a year to fill it out. A heads up, starting in August, I haven't picked any dates yet, but starting August, I'm going to do once a month review of this form for anybody that's not aware of it, how you fill it out, etc. So that's going to be an upcoming presentation. As far as upcoming shows, I not only got July filled, I got August. Remember, if you want to be on a guest on the show, let me know. Love to have you. So next week, we're having David come back on to talk about retirement investing for small companies, an important topic. I've never had a pension or anything like that from a company, but I put like a little penny in here, a little penny in here, and slowly those pennies add up. It's the Ben Franklin thing. So this is to talk about, okay, I really don't have any money to even pay myself. What is the least I can do? So we're not being any kind of, oh, you have all this extra money to invest. No, I understand where you're at, guys. This is just kind of giving you some options. Then we've got our favorite frequent flyer, one of our favorites, I should say, Emma Green, coming on the 17th to talk about Emma Green programs and everything going on in her world. Emma always has wonderful, cool new things happening. Then we have Shannon Jackson coming on. You're going to love her, guys. She is the founder and owner of CNS Services. She's a nurse and she's got such a great, powerful message. So you're going to absolutely love hearing from her as well. Okay, so today's show is literally Ask Me Anything you want to ask. We can talk was telling Sadie, I'm tired this week. I'm gonna be, straight up to tell you, I need the vacation. Have you ever guys been like one day short where you should have had the vacation yesterday, but you got another day in it? That's what I have. And so I didn't want to have a guest on this week because I didn't know how many of you would be tuning in. Although look at all the people we have. It's amazing to me. Thank you for being here. So I thought, well, if I have a guest and we don't have a, full group in, it's not fair to the guest. So I thought, you know what, I'm going to be the guest today. You guys are the host. You can ask me anything. Sadie's going to help me out. I can see the Q&A a little bit easier. So if you put it in the Q&A, I can see it. Sometimes the chat gets so filled with information, I don't see it as well. So we're going to talk about any subject you want to ask. You can ask a question. So the first thing I see from Yolanda, I thought LLCs do not have to pay the 800, only an S or C Corp. Not true. No, Yolanda, not true at all. That is not true at all. The only, if you will, structure that does not have to is the sole prop. So the way it works is if you are, and we're specific to California, I know most everybody, I think everybody is in California that I'm speaking to, but I want to make sure I say that this is about California. So in California, if you're registering to be incorporated, that would be an LLC, an S Corp, a C Corp, you're registering to be incorporated. Well, then you are paying this franchise tax fee. So in many ways, what it is it's a fee to have, they actually even say, I think the word luxury, but a word like that, to have the ability to be incorporated in California, the $800 fee is charged. Now, I want to please make a note to you guys. I always speak of the $800 franchise fee. What I really should be saying is the minimum $800 franchise fee, because it is a minimum amount and you have up to, I think I'm going from the top of my head, but I think I'm right on this, 250,000 in revenue equates to 800. And then there's a sliding scale that it goes up. So I don't want to give a impression that only 800, it could be more than that. But what happens, like I said, if you don't pay in the 800, and they're been really slow to catch it because you're paying the 800 into the franchise tax board and your registration as a company is in the Secretary of State. So they're kind of two government organizations, if you will, and they communicate together, but not always in a split second, right? So I'm seeing that even people that are past due about a year, it hasn't quite caught up. And I'm telling people, get under the radar and get this in. And I think Sadie put the link into the main page at the Franchise Tax Board because there's a mailing address. So you can mail it in. And the goal is that you mail it in before they catch it, because if they catch it, they suspend it. And then it's kind of an ugly situation to get out of suspension, because you've got to pay the 800, you got to pay the penalties. You can't dissolve a company until those are paid. So you kind of get into this circular thing where you have to, pay the amount to be able to dissolve it. You can't dissolve it until you pay it, and then you keep incurring fees. So hopefully that answered the question. Let's see, Sarah, for protecting my personal assets, is it okay to buy good professional liability insurance and to be a sole prop, or shall I incorporate? First of all, Sarah, I want to say a shout out and thank you for asking that question. I love being asked that question. So obviously, this is a whole presentation in itself, so I'm answering it in details, not as detailed as I do during my webinar, and feel free to always reach out to me for more information. Now, it is a true statement that when we talk about incorporating, whether we're talking about an LLC, an S Corp, a C Corp, we're talking about incorporating, many of the reasons that people choose, one of them is what they say is protecting personal assets. And unfortunately, that concept gets sold or oversold because it basically is kind of the thought process. Oh, well, a corporation saves my personal assets. I want to save my personal assets, so I should incorporate. But it's not that simple of a decision. It's no different. And I love to explain it this way. If I say the word buy an insurance policy, I think most of you immediately think, well, let me see if I really need it. And I don't want to spend an insurance policy if I don't need this. You think immediately with an awareness and almost a bit of questioning, do I really need this? And your biggest question is, what does it cover? And would this be something I'm going to experience or be concerned about? That's how you would equate that question, right? So where am I going with this? Incorporating does protect your personal assets, but you have to identify in what situations and how and why. So let's talk about a small business. What are some of the biggest expenses that a small company may incur as it grows or it gets established? And one of them would be leasing a piece of property, leasing a brick and mortar, leasing an office space, whatever, engaging in a lease. Now, when you engage in a lease, they have what they call PGs. That's called personal guarantees, right? And a personal guarantee is basically saying that the person, personally guarantees this in case that the company cannot pay. So you think of it like, if you are co-signing on a loan, it's kind of the same concept, right? So whenever you're renting any space or leasing space, property is usually, if not always, close to always requiring a personal guarantee. So if you have a situation where you're wanting to go out of business, bankrupt, that lease is still going to be your personal responsibility. It's not protecting you personally, and that means they can still go after you if they choose to personally because you personally guaranteed the lease. Now, the other big expense that a company can incur is also a loan, getting any kind of money, borrowing money, financing. Now, this is pretty much always across the board a personal guarantee. So if the company goes out of business or cannot pay the loan, once again, you're personally guaranteeing it. So therefore, you are responsible for it. So the act of shutting down the company, filing bankrupt, is not going to eliminate your need to pay this loan back. So those are the two biggest expenses. Now, say you have an employee and you made a mistake on the payroll, that comes under civil liability. So you're still personally responsible. You can't get out of not being personally responsible by being incorporated. Now, if somebody sues you for a product and they decide that there's malfeasance or there's some kind of product issue, they still can come after you personally. So the corporate veil does have an aspect, but it's not covering a lot of the situations that are common to small companies, right? Now, in that, when you look at, for example, a company that does web design, and you say, okay, I want to protect my assets, you have to go, well, what is the chance of somebody suing you for the web design or the marketing plan or something like that? And if they sue you, they would have to then take you to court. The courts would have to decide that you are personally liable. You would have to say, no, I'm not paying. And then they'd have to come after your personal assets. That's a long, long road to walk down. More likely than not, if somebody says, I'm not happy, a customer, you go, well, here's your money back. Just go away, leave me alone. So you have to look at what is the real risk engaged in this, because once you incorporate, you're under certain rules, you have certain fees, etc. So I like to equate it. I know this sounds strange, but it's very much like dating versus marry. Maybe you just want to date a little bit as a sole prop and see where it's going and determine from there. Now, there are companies that right out the bat, they've got a certain amount of risk that you say, okay, this has got risk. I need to incorporate right away. So I am not saying incorporation is good. I'm not saying incorporation is bad. What I'm saying, and I say this across all things I speak of constantly, know what is true, know reality, make good decisions based on fact, not just some video that you saw real quick that says you need to, incorporate, because a lot of these are from people who, like LegalZoom, make it, money off helping you to incorporate, right? So a lot of times being a sole prop is the answer. And the second part, Sarah, that you said that was so insightful, and that is getting insurance. Because even if you're trying to protect from being sued, you still got the cost and it's still your company, it's still your money. But getting an insurance policy is often the better choice. And even those that are incorporated still get insurance policies. So it says a lot that if you say I'm incorporated, but I'm still buying an insurance policy, that's not the only thing that's protecting you. And many of the insurance policies will cover legal fees. So there's a type of insurance policy that you may not be aware of, like you've got professional liability insurance you mentioned there. There's a type of insurance that's called errors and omissions. It's E&O. And these policies can be written to specific concerns you may have. So being a sole prop and having errors and emissions insurance is often enough and will suffice. With that said, I got to say risk is personal, and each person has their own feelings on what needs to be covered and what not, so I want to make that statement as well. And the last thing I'd like to bring to your attention that a lot of people don't have an awareness of. Now, this is an old number because it's a statistical number. And what happens is the statistical numbers are like from previous years. And I learned this number actually when I was studying for my enrolled agent exam through the IRS. And I got to say, I personally was surprised at this number as well. So what am I talking about? And it was that 82% of the companies in the United States operate as a sole prop. And I knew a lot of them did, but I wouldn't have thought that 82% did. So it just goes to show you that more people are operating as a sole prop than you're led to believe. I always kid around that saying LLCs are the Gucci bag of LA. Look, I got my little LLC. And every day of my existence through the SBDC, I'm helping people dissolve these companies because now they're not aware that they have to do the $800 franchise fee, the BOI, and all these other type of requirements that they need. And they find that they didn't really need that and they got involved too soon. Okay, I think I spoke enough on that. Any more questions or anything else that you would like me to answer on that? Just put it in the question. Excellent question to ask, Sarah. Thank you so much for bringing that up. Lupe, we would like to change the stockholders on our corporation, but don't know how to go about it or who to contact. Would you be able to provide some guidance? Thanks in advance. When you say stockholders on a corporation, I'm going to assume that you're an S Corp or something like that. So what you have to do is file documents. You can either get a lawyer to help you on that. Whenever it's a corporation, I always say it's a little bit more complicated. So it's good to have somebody work with you on it. But there is a document where what you have to do is you change out the corporation stockholders. But see, there's another aspect to it, because when you're speaking of a stockholder and you're speaking of a corporation, they are a stockholder, meaning they own stock, right? So you also have the concept of, if you change them out, do they still own the stock? Are you buying them out? What are you doing with the stock? You have to also have an understanding that when we talk about the legal aspect, the corporation, the stock owners, etc., this is also translates into taxation. So you can't just kind of make these changes without having these changes be thoroughly followed through the taxation process as well. So for an example, and I can give you many of them, but there is this company that was a couple that, formed a company together, and they each had, stock in the company. They both formed it. It was an S Corp, and then they went their own way, but, they had to have a buyout, right? So they had to identify, and he had to buy her portion out and then, remove her from the documents and the articles in corporation, have to, have information on that as such. And so the process of going in and out of a corporation from a stockholder has to have a lot of T's crossed and I's dotted, from what is the buyout, what is the agreement, what is the articles of incorporation state, and then I would say you are changing the official documents with the state. So there's a lot of actions that have to take place other than just filing the form. So I think they're complicated enough. I would seek out someone that can help you with these type of documents. Okay. And I might say your name wrong, so please forgive me, Sir H. I know I said it wrong. I apologize. When do you know I'm ready to go to a from a sole prop to an LLC? So there can be two reasons on that. Of course, many, but let's talk about the two main ones. One is that the risk becomes different. Let me give you an example, an interesting one. So there was a company, and like I said, there's so many, it's just whatever pops into my head at first. But there was a company that she was a herbalist. So she would meet with people and say, you should take these herbs or those herbs, etc. And she was operating as a sole prop for many, many years. And what happened is that she created some products, and now these are ingestibles, they're teas and stuff. And the products are now being sold in retail outlets. And she has a commercial kitchen, and all this stuff is happening now. So now I wouldn't want to be a sole prop in that situation. You're purchasing things, you got a commercial kitchen, she's getting some of this manufactured in China, it's going into a retail store, it's being consumed by people. I wouldn't be comfortable then just being a sole prop. That's me personally. So that's when she went to an LLC. Now I've been in, I've had my own company, in and out, for decades upon decades. And for a very long time, like decades, I operated as a sole prop. But I started my first company at 25 and I was in the marketing, sales. Who's going to sue you for that, right? And over the time period, I switched and, I'm all known as the guru of all numbers, but, I got into finance and then I started my work in my probably, I think it was my 40s, somewhere around that, in the finance world, being a CFO. I had been a banker, so I started getting involved with banking. I started getting involved with funding with companies. Okay, we're touching a whole different animal right now, right? So that was when I was like, okay, I need to be a corporation because I can get pulled in a lawsuit with the big boys there, So then I was not comfortable operating as a sole prop anymore. So it has to do when risk change. Now, the other reason is there is a truth that, and I know I'm going to bring up something that needs much more explaining. So just if you're hear what I say and you need more, Sadie always puts my email into the chat. You can set up an appointment with me because I know I'm not going to be able to go through this enough to even touch the surface of it. But there is some truth in a company that is either structured as an S corp or taxed as an S corp has some savings, but you have to get the net profit, not the revenue. You have to get the net profit high enough to make it make sense from a taxation perspective. Otherwise, it costs you more. So it's a goal that you have to get to before it makes sense to be taxed as an S corp in any way, shape, or form. So you say, why would I know I'm ready to go to an LLC? Well, some people will eventually get where the net income is high enough that there is a tax savings to be taxed as an S corp. So what they will do is they'll form an LLC legally, register legally as an LLC, because that's a simpler business structure to register than an S corp, and then they will file form 2553 to be taxed as an S corp because they have reached that level where it makes sense to do so. So the question is, what is the reasons that people would go to an LLC? The risk changes, the risk factor changes. Something happens where it no longer makes sense to be a sole prop and you feel as though you need the LLC protection, or the profitability of the company, the net profit, and the net profit as the individual owner. If there's two people, it's their net profit, as far as ownership, what have you, that reaches a level where it makes sense to be taxed as an S corp. So you form an LLC to be taxed as an S corp. So that was the long story. And I saw another question: is it easy? Yeah, it is relatively easy. It's still filing documentations and knowing, but it's not like forming an S corp. I have to say, in comparison, starting an S corp, that is a lot more complicated. And the reason being too, if we look at it, it's because S corp, when you are an owner of an S corp, you're known as a shareholder, and you're a shareholder because the S corps are distributing stock equity, right? LLC, you're known as a member. There's no stock involved. So in many ways, just the aspect of the distribution of stock and the equity creates a added complexity. And then the articles of incorporation for an S corp are much more complicated than the articles of organization for an LLC. Okay, anonymous, if we paid the 800 LLC for the last 3 years as a single member, would we get time credit for the future years? No, I'm not quite sure of the question, but let me just say it this way. The 800 LLC as a single member or a multi-member, it doesn't matter. It's 800. That doesn't matter. It's 800 per year, every year. There's no credit. There's no nothing. That time period. Oh, I know, anonymous. I got it. I got it. Okay. I briefly said about those time period that there was an exemption. So let me get in more detail on that. Thank you. I get it. So during those years, January 21 to 24, there was a rule on the book that said anyone who started a brand new LLC during that time period, for 1 year, they were exempt from the 800. And the reason this was, it was during COVID. The government, this is my impression of it, so I don't know this for sure. This is Lori's words, but the government was trying to get people to start companies, right? And so they made it where, okay, if you form an LLC in this time period for that first year, you are exempt from paying the 800. Well, this is where the confusion came, and this is why I keep talking about it, because two things happened as a result of this. And it was also crazy time, and so people weren't totally aware or didn't do the full research. So if they formed the LLC, they didn't pay the 800, they didn't realize necessarily it was acceptable because it was exempt that year. They just thought it didn't exist, right? So now they don't think the $800 exists, and then comes the next year, they don't pay it, and they don't even have an awareness of it. And I have this happen all the time, because when I speak with people one-on-one, I do like this little audit. Okay, did you know you need to do this? Did you know you do, I do that constantly, right? And I'd say to somebody, well, the 800, they go, what 800? I'm like, the annual franchise fee. Is there a fee? And this is where they would be shocked, and they weren't even making any money. And then I would be like, well, if you want to dissolve it, we got to pay the 800 before you can dissolve it. So I said one of two things would happen. Somebody's not even aware of the amount, or people forming after that time period, I would say, did you pay the 800? They go, oh no, your first year is always free. Oh no, that's not true at all. So I get what you're saying, Anonymous. It's not that that $800 wasn't owed those 3 years. It's that if you formed a brand new LLC within that first year during that time period, it wasn't owed. But now that game's off, guys. That game's gone. You form an LLC, the 800's due on an annual basis. Thank you for asking and letting me provide some clarity. I usually go into detail, but I can keep bringing it up, so I kind of went a little bit too fast and didn't give you all that detail. Okay, Kathy. Hello, Kathy. Very helpful again. Thanks. In the beginning, I assume company owners that owned buildings as well wanted the corporate shield. Now company owners do not own buildings. Should we change from a C Corp? Once again, these kind of things are impossible to just make a statement saying yes or no, okay? Because they're tied into taxation, they're tied into certain rules. So all I can say is some considerations, and then you have to look at each situation specifically. So C corps, and whenever you say always or never, you're always saying the wrong thing. Okay, that's the only time you can use always. So I'm not going to say always or never, but for the most part, I hardly ever, like maybe 0.01%, see small companies scheduled as a C corp. The reason being is the C corps have double taxation. And so you look at it and you go, okay, if the corporation is taxed at a higher corporate level, and then I'm taxed as an individual on the personal level, why do I want to pay double taxes? So a way to kind of get your head around this is, whenever we're doing something that's not good, that we don't like, we do it because there's some advantage we're getting. There's some advantage, right? Now, in the case of a C Corp, many times the reason why somebody would form a C Corp or is a C Corp is that C Corps are able to have more than 100 shareholders, unlike an S Corp. And they're able to have shareholders that are not US citizens, unlike an S Corp. So I want you to, for a minute, think about Wall Street. Think about the companies in your stock portfolio. They're all C Corps. They got more than 100 shareholders. They have non-US citizens owning their stock, right? So people are a lot of times forming a C Corp for that reason. Is that the only reason? No, but that's one of the biggest reasons, right? So it is kind of like you accept the double taxation because this is the road you're going down, and you're like, okay, I got to go down that road, right? So for the most part, you really don't see the small businesses formed as C Corps. I do see sometimes some of the older companies that have been around for a long time formed as a C Corp. Now, here's where I'm going on a belief that I could be wrong. So, spoiler alert, I might be wrong on this, but I think, and I think I might be a little bit correct. At one time, and I'm talking decades ago, that's why I'm saying I don't really remember this, but I think there was some policies decades ago where there was a time period where being a C corp had some tax advantages over an S corp. I wasn't engaged in what I'm engaged in now. It was way before my time on this. So I remember reading about it. That's why I don't know about it. But I think sometimes I do see some of the companies, they're small companies, but they've been around forever, being a C corp for that reason. Now, sometimes people will form a C corp because they're going for large investment and the investors are requiring it. So you can see all of these things that I'm talking about. I'm really talking about things that are not really in the general day-to-day experiences from the small companies, right? They're kind of outliers. So that's why you don't see too many being a C corp. So in conclusion, Kathy, it's a very important thing to look at because you are maybe registered as a C corp for no good reason, and you can be re-registered from a taxation as an S corp and not have that double taxation. But I would start out by talking with your tax preparer because they will have more insight as well. Anonymous, I'm going to jump down to you for a second. Register in 2021. I don't know if they'll do a refund if you paid in and did not need to. I don't know that. I've not had that experience to see if they would. I know that the government tends to not like to do refunds, but I will do a shout out, and Sadie, please put that link in. I think you have it. If not, you can let me know before we close and I'll make sure you get it. It takes you to the main page for the franchise tax board, and there's a phone number there, and you can call them and you can ask them and see if they take payment, if they'll do anything if you paid when you wouldn't have necessarily had to. Okay. Russell, if I have an online business coaching community and everything I make goes back into building, growing, I'm currently a solopreneur with a DNA. Do I have to still put income from it? I'm worried about taxes and not doing things right. So one of the things that you guys need to understand on this, and good question, Russell, good question. So we're going to just touch a few little things on this. So one of the things I hear people say a lot that is incorrect, just completely incorrect, and that is that I want to form as an LLC to save money on taxes. Okay. LLCs and sole props are taxed the exact same way. They use the exact same form, guys. There's no different form. They're used the same way. People go, well, I want that tax deduction that an LLC has, like a business tax deduction. There is no difference. It's the same thing. You get rent, you get this, you get all the same things, right? So there's not a difference in the taxation. There is a little bit of a credit you get for being incorporated in business and stuff like that, but not a major difference. It's the same kind of taxation, same form, right? So in that, how these structures both work is in the mathematical equation where you say all the revenue. So like take all the cash you got from the company, all the revenue, all the money you made in that year, and you subtract all the expenses, whether those are expenses are cost of goods to build something or buy something you're selling, or if you're a consultant, you may not have cost of goods, and then you subtract expenses and you have net income. Okay. So if I have like $20 in revenue I brought in for the whole year, I make up small numbers so it's not confusing. I have another maybe, $6 in full expenses that I paid out. I have $4 in net income. It's that $4 that is subject, I'm going to say subject to taxation, right? So it's that $4 that is going to go on the personal tax return. It's going to be added to any other income you have. If you got a W-2, you got rental income, any other income, to identify gross income that is taxable on your personal tax return, right? It's also that $4 that is going to be subject to Social Security and Medicare, which it's 6.2% for Social Security, 1.45 for Medicare. So right about 7.65% of that $4, that net income, you have to pay in on Social Security and Medicare. And whether or not you took the money out, you put the money back in the company, none of that matters at all, guys. That does not matter. It's literally that formula that I just gave you, the revenue minus the expenses equals the net income, and that is subject, I say subject to taxation, because what happens is that $4, it does have the 7.65 about that combined for the Social Security and Medicare, but that $4 gets added if you're filing joint, your spouse's income in a W-2, it gets added to any other income you have, then it gets the mortgage and all that subtracted to become gross income. Taxable income, I mean, taxable income. So in that, you can see where I say the $4 is subject to state and federal taxes because it goes through your personals and then it puts you in a tax bracket. But the thing to get out of your head is that there's any, like I put money back into the company, you're paying taxes on it no matter what. That's how an LLC and a sole prop works. So what you want to do is you want to have a consciousness that wherever your net income is, you're going to have to pay 7.65, combined on Social Security and Medicare, and then it's going to feed into your personal and be in your personal tax bracket. That's why it's impossible to say how much money is the company going to owe in taxes unless you know the formula, you know where you're going to be at the end of the year, and you have an understanding of the personal side of the tax returns too, because that plays into it. With that, I want to make one more thing that I want to give you guys some information on, because this is one of those confusing things as well. So let's stay on the concept of taxes and let's talk about tax estimates for a second. And it's going to sound confusing as I say it, but bear with me on this. There is so much confusion about whether or not you have to make tax estimates. So now I just talked about the Social Security, I talked about the state and federal, I said this is how much you're going to owe. Well, how much will you have to make in a tax estimate, your quarterly tax estimates? Do you have to pay in tax estimates? This is another confusing thing. So the way that it works is there's this rule, and it's all individuals, all companies. It doesn't matter whether you're in, incorporated. Everybody across the board, everybody is under the same rule. And it says that by the end of the year, so we would say at the end of this year, December 31st, 2024, you have to pay in either 90% of what you would owe this year or 100% of what you owed last year. Now, why 100% on what you owed last year? How many people are getting your taxes calculated and figured before the end of this year? If you're an S corp, you need to, because you got to get that, W-2 salary configured and paid in before the end of the year. But everybody kind of thinks taxes around February and March. So do you really know what 90% is of what you owe? No. So therefore, the IRS has this rule that if you pay in 100% of what you owed last year, you're avoiding what is called an underpayment penalty. That's what you're really avoiding, is this underpayment penalty. So if you had this experience, what happens is when you go to a tax preparer, they give you these sheets of paper. They're called a coupon. They're like little 4 sheets of paper, right? And the coupon gets mailed in each quarter, and it's whatever you owed the previous year divided by 4. This way, when the tax preparer does not see you until the following year, they know by the end of the year you satisfied I paid in 100% of what I owed last year. So you don't have an underpayment penalty, right? So that 100% of what you paid in doesn't necessarily represent what you fully owe, because you may owe more. It doesn't even represent that you owe that, because you could have had less net income or more deductions, if you will, because of you had less net income because of more deductions. And so therefore you owe less. But that 100% of being paid in is providing you with the ability to know you're not getting hit with an underpayment penalty. Okay. So in that, what happens is when somebody has a company and they're just starting out, or they don't have any net income, they don't owe any taxes. So what's 100% of the previous year? Well, if they didn't owe anything, they didn't have to pay taxes in. So this is so true, especially of people who just formed a company. Sole prop LLC, it doesn't matter what I'm talking about right now. So I had somebody actually say it to me. This is the best way to explain. They go, well, the government doesn't care if you pay in estimates. It's your choice. I'm like, oh, no, 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 no. The reason you didn't have to pay in the previous year is because you had no income. You had no net income. You had zero or negative. So you didn't owe anything. So 100% of the previous year was zero. So that's why you didn't get penalized for not making estimates. But you made money the previous year, so you owe it. So once again, what happens is when somebody has a limited experience, creates the LLC during the time period when there was the exemption on the 800, or didn't have net income, so didn't have to make tax estimates, they believe that always to be true, and it's absolutely not true. It's absolutely not true. Okay. So there's the answer on that. Okay. That was a long answer as always. Like I always tell you guys, this stuff, when it comes to tax, finance, and legal, it's complicated. It really is. And I want to make this last statement, Rick, I'm coming to your question, is that, too many people, and I just can't say this enough, too many people are getting their information from videos on YouTube and TikTok of all things. That's crazy talk, guys. Finance, tax, and legal structures have gotten more complicated and more convoluted and have more rules and regulations just over the last 4 years. My involvement in it, I see it getting more complicated, more rules, more regulations. But the DIY, use a company, set up your own LLC, you don't need to talk to anybody. Yep, it's so easy, and don't worry about taxing and filing of S corp forms. People are doing this more, and like there's this like opposite direction. It's getting more complicated legally, and you can get in more trouble, and people are giving less respect and understanding about the complexity of it, and it's creating the perfect storm. I had somebody file to be an S corp, which they didn't even have any profit. It's costing them a ton to be an S corp. And they said, well, filing the form was free. Well, it was a government form. Of course, filing it is free. And I felt for them because they didn't understand. We're trying to unravel this whole thing right now. So do understand and have some respect that these concepts are very complicated. Make sure you get correct information. And what's most scary to me is a lot of people on social media giving these advice. They're not even tax people. You don't see, like, I would not do a social media thing that talks about, any of this because it's too complicated. I would be giving possibly incorrect information. So you usually don't see the people that are highly knowledgeable and certified in these areas doing the kind of things that you see on social media that people are taking it as advice. Okay, I'm done lecturing. Rick, do you need a C Corp if you plan to use a Rainmaker plan, 401 IRA business funding? I'm not even sure on that, Rick. I don't even know exactly what the Rainmaker plan is. You don't need a C Corp if you need a 401k or IRA, by no means. In fact, David's going to be on and talking about this. There is the individual 401s. You can get those in all types of companies. I have a 401. I do not have a C Corp. So no, these are not C Corp type things. I don't know about the Rainmaker plan. I don't know what that word means. So I'm going to be straight up. I don't know that. But there is no need to be a C Corp. In fact, you don't even need to be incorporated for a lot of these. There's the individual 401k, which David's going to talk about this. I'm not an expert, but I was kind of surprised. Several years ago, I set it up for my company because it's a great thing to have. And I, had it in my head, you had to be a corporation. You had to be, I was thought the same thing, Rick, but no, there's been so many new, can I call products out in the investing world that are really focusing on the solopreneurs, the sole props, in other words, the LLCs, the S Corp. There's a whole bunch out there for people to take advantage of now that do give matching and the deductions and the tax deductions, which is why I have mine set up as an individual 401 to help lower my net income and my taxable income. Lily, how do I form a social enterprise if I already formed a nonprofit organization? Not sure on that one, Lily. You'd have to send me or an email or stuff because you've got a nonprofit. I don't know what you mean by the social enterprise. I know that I'm not an expert or staying up on that. I know there's the B Corps and all this type of stuff. So I am not an expert in all of these new hybrids that are out there. And I have to say, this is just my personal opinion, guys, my personal opinion only. Please note that. I'm not a big fan of the B Corps. I know that's going to be like, oh my God, the whole audience just went aghast that Lori Williams said this, right? But you know what? I'm my personal opinion, and I always tell the truth. The B Corps, they sound really ideologic, and they sound great, but to me, it's more of what are you wanting to do in the world? There is a great thing about investing and being conscious of the earth and all that. I'm all for that. I'm all for that. But I'm not necessarily a believer that we have to form a legal organization around that, because the minute you form a legal organization, you have to follow all the rules and regulations. And sometimes I see some of these requirements for B Corp, small companies have a hard time, right? And so therefore, what I always say is, form the simplest, easiest to manage legal structure and business structure that allows you to have discretionary income, because discretionary income is what does good in the world, right? And so that might be a sole prop where you make enough money that you can invest in things that mean a lot to you, whatever they may be. I'm not of the opinion of what should or should not be, whatever they mean. But I think sometimes we're getting too engaged in forming these legal requirements as a small company that are just more harmful to us. So that's kind of my statement. I'm not saying specific to your social enterprise, nonprofit organization question. I'm just kind of saying that in general. Be really conscious when we enter into all of these type of structures. They may be actually causing more harm to you at the stage of development you're in than not. So I definitely don't claim to be an expert on all of these type of new hybrid structures that are available today. I'm just not knowledgeable enough on them. Yolanda, I do my taxes each year and typically have to pay. Are these monies going to my Social Security and Medicare? Well, there is, yes, absolutely. And so what happens is when you are a LLC or a sole prop 7.65, I'm combining the two numbers. They do go to your Social Security and Medicare. That's part of what those taxes go to. So it depends on the tax we're speaking about. The Social Security and Medicare goes to your Social Security and Medicare. If you're organizing an S Corp, the company has to match that amount. It goes to your Social Security and Medicare. If you're paying in federal and state, that goes to federal and state. So when we pay taxes each year and you typically have to pay in, I just can tell you that out of net income or income earned, that percentage is a standard percentage that goes to Social Security and Medicare. So part of that is going to that, but part of it may be going to other aspects as well. Okay, Demetrio, thank you for this platform. You are welcome. Thank you for asking a question. Do I understand correctly that once established DBA, all financial transactions going forward are to be conducted as the DBA and not the owner name? Additionally, a business bank account does not require the DBA, correct? Okay, got a lot in there, Demetrio. So we're going to unpack a bit of this, okay? So first of all, a DBA, which stands for doing business as. Also, it's called a fictitious name. This is another huge area of confusion. So before I get into the specifics of your question, let's first identify what a DBA is. So people get this misalignment, I should say, that a DBA is about being a sole prop. A DBA is any sole prop or any company that wants to operate in a name other than their surname, which would be a sole prop, my surname, Lori Williams, right? Or if I was a company, which I am too, my company name is Business Simply Put LLC. So say I wanted to do a financial transaction. Now I said financial transaction, and I'm going to tell you why I said that in a second. Let's back into this. I want to do a financial transaction. So say I want to, maybe I want to start a portion of my company and I want to market it called Taxes Simply Put, right? I want to have this extra part that I speak specifically to my tax skill. So I say Taxes Simply Put, and I want to have a website and it says Taxes Simply Put, etc. But then when people go to pay me, I say, make the check out to Business Simply Put. That would be kind of confusing. So I might want them to make the check out to Taxes Simply Put. But if I went to the bank and I said, can you deposit this in? They'd look at the bank account and go, there's no name called Taxes Simply Put on the bank account. You can't put that in there, right? Just like if I was to try to put a check in your bank account, I couldn't, right? Now, the same is true. They say I was a sole prop and I'm under my name, Lori Williams. I open a bank account under my name, Lori Williams, and I want somebody to write a check to Taxes Simply Put or Business Simply Put. There's no name. The bank can't put that name in. They can't put that financial transaction in there. So creating a DBA allows the bank to then add that name to the account. So if my account in my company is called Business Simply Put LLC, because that's how the company's registered, I could have, which I do have a DBA for my company, by the way, but I would have a DBA and it would be in my scenario, Taxes Simply Put. So now a check can go in for Business Simply Put, a check can go in for Taxes Simply Put. If we use the example of a sole prop, Lori Williams, a check could go in for Lori Williams, a check could go in for Taxes Simply Put. So the DBA is really allowing financial transactions in a name other than our surname or our corporation name. And we would want the financial transactions because we are marketing under that name and we want to have payment come in under that name. So the DBA is really about payment. Now, once you identify a DBA for the company, you file a DBA, then what happens is when I'm filling out taxes, it's going to have, as you know, in the company, it's going to say, what is the company name? I have to put Business Simply Put LLC. Then it's going to say DBA. Well, I have to put all the DBAs because we are functioning in the marketplace. We are getting payments. We are having POS systems. We are doing things under all these names. And so just like, if you will, when you're doing something, it says, do you have a maiden name? What's your birth name? What's on your birth certificate? The form may want to know all those names because you functioned in the world under those names and they want to have all the information of all the transactions you did under the various names, it's the same thing. So once you have a DBA, the forms you fill out for the government is going to ask, do you have a DBA? Write all the DBAs it has, because it wants to make sure it has tracking of all of the names you're functioning or have functioned under. And a DBA lasts 5 years and you have to renew it. And the DBA is not protecting your name like people think. I've heard people say, well, I'm going to get a DBA and then my name's protected. No, you can get a corporation with that same name. These are different databases, right? So it's not like a DBA is going to protect the name of the company. It's not. It's just allowing you to do financial transactions. So I think in my explanation, which was a more thorough explanation for everybody that is dealing with that, they hopefully I answered all of your questions as well. So I think I've got all of the questions that are being submitted right now. I don't know on, oh, we got another one. Does SBDC have attorneys that work with us that can help business make the necessary changes to sole props, LLCs, and corporations? So Luby, it's a little bit about how the SBDC functions. So the way we function is we function as advisors. And you know, simplest terms, like I can say, I can tell, I can't do. We can't perform activities within the company, right? So there is, you know, attorneys that can say, well, these are some of the rules, just like I'm saying these are some of the rules, but they can't get engaged in any legal forms. They can't fill out legal forms for you. They can only give information, right? So that's part of the policies of the SBDC, that they can only engage. And that's why I say when it comes to complex things, and the question earlier, I'm sorry, I don't recall who asked it about the C Corp and changing shareholders. That's why I said you really want to possibly get somebody that you're hiring and you are paying and you're engaging with them to actually fill out the forms for you, work through the forms, because the SBDC comes from a advice standpoint. They do not come from a engaging and doing. We can't be seen in any way, shape, or form as actually doing into the company, doing work into the business, if that makes sense. But with that, we do have companies, I'm sorry, we do have some lawyers as advisors on our group of advisors that are available. So a couple locations do have some lawyers that are available there. Okay, where can I get forms to sell my business? You know, there's really not like forms to sell a business. When we talk about selling businesses, what we're talking about, a lot of times people in the small business world, they go through business brokers, right? So getting a business sold is about a couple things. You know, it's about making sure you have proper financials and tax documents so the buyer can understand the finances within the company. So the first part is getting your books in order, if I can say it that way, and having them be accurate, so there doesn't come any questions or confusion or scary things that somebody says, well, this isn't matching the tax returns, I'm scared of the company, right? So there's the getting it done and getting it done correctly. And then there is the offer letters and the memorandum of understanding and all of the legal documents. And although there is definitely, like any legal document, a portion that is a boilerplate, there's a portion of it, these documents are really, really specific, because especially, you know, I shouldn't say especially, I should say in all sales of companies, it's not like I'm going to sell a pair of Nike shoes. You know, it's not like, okay, you buy the shoes. It's not even like real estate, which has its own set of challenges as well. You know, there is so many specifics to when somebody buys a company. It's, you know, what's the transaction? How is it going to be taken place? What is the intellectual property, if it is? What is the inventory? How this is happen? What if there's any bank loans, etc.? So you don't really get forms to sell the business, although obviously you can go on one of those rocket lawyers and pull up forms. I'm assuming, I never looked into that as well. So I don't want to say it's not like you can't. It's just not suggesting, because these are legal binding documents, and a lot of times they have things such as goodwill, etc. And so you really need to have somebody be able to, a lawyer be able to work with you on making sure everything is properly inclusive in these forms, so there's no comeback down the road. That's what we always worry about, is the comeback down the road. You know, on that, I'm just going to make another quick statement. on something completely different, going back to forming these registered companies that just came to mind. This is something else people don't realize. When you register a company, it is in, I'm talking about state of California again, guys. I should always say I'm talking about state of California. It is illegal. I think it's actually a felony to use a PO box. Like, for example, if you're registering your LLC, people think they want to go to like a UPS or a mailbox, et cetera, and they use that address to register the LLC. You cannot do that. That's actually illegal. It has to be a physical address, right? And the state doesn't necessarily Google each of these addresses to make sure that this is a physical address, right? But what can happen is, say down the road, for some reason, you do get sued, you got the legal protection of the company for a reason. And if the lawyer on the other side can show and research and say this isn't a physical address, that makes that illegal in the state of California. So this is really not a corporation. It's called piercing the corporate veil. It eliminates the protection of the corporation and allows somebody to go after them personally. So some of these things that are not well known, like you cannot use a PO box on these documents. And I was explaining to somebody that the other day, and they go, but nobody said anything and nobody caught me and I was able to. Well, just because you're able to in these online forms, et cetera, doesn't mean that it's right, and doesn't mean that it won't come back later to haunt you in the case that you are actually trying to rely on this corporation being intact. And that's one of the challenges with, a corporation versus a sole prop, because you're under a whole set of rules. And if you, mingle funds or you do anything where you're not acting like a corporation, then it's called piercing the corporate veil. And that would mean that in a court of law, somebody can pull that card and say, that's really not a corporation. And then you lose the protection that you have. So a lot of these things that you may not be aware of can actually come back later, and be conscious of this on the physical address, because that's another thing that I hear people always confused about. What if I'm using a mail center as a business address is incorrect? Yeah, it's got to be a physical. If you, I had a, okay, so there's a lawyer that said this really well. If it smells like a PO box, quacks like a BO box, it could be a PO box. Now, when you say the business mail center, a mail center could, I'm assuming that's just a forwarding mail. And so I talked to somebody the other day. I was like, how did some of these mail forwarding centers get around this rule? Well, it's kind of a thin line that says, well, if they identify that they're actually there and they're part of the structure, I can't say from the specifics of the law, but for the most part, they're looking for a physical address. They're looking, which can be your home address, guys. I don't want to say it can't be your home address. It definitely can be, right? But these virtual offices, no, and you have to think about this, guys. This is where they want to, and Yolanda, just because it's a physical address, like the UPS store is a physical address, right? But it's not where you are physically operating the company. Okay. And I'm not an expert on this. I'm not a lawyer on this. I'm just trying to bring this up to you guys. I learned this a long time ago in the ruling, and I talk about it quite a bit. And, like the lawyer says, if it smells like a PO box, right? So the reason they're doing this is just the same reason. Let's look at this differently, guys. If you have a driver's license, you can use a mailing address on your driver's license, but the official form that you fill out has to be a physical address. You can't say, I want a virtual address on my driver's license. It's a felony, because they want to know, where is it that this is being operated out of if you're the human, or where is it if the company's being operated out of. I personally do see a lot of these companies say, we can give the address to you. That's why I asked the lawyer, I said, how are some of these people, getting away with it? And he goes, well, it really comes into question with the veil, and, it's hard to say, so I would, when in doubt, consult the lawyer that can give you more detail. I'm just trying to give you a heads up, some knowledge here. But when in doubt, I like to err on the side of making sure things are very clear and very clean, right? So that's a real important thing to do. Kim, what about using a third party in another state to form your LLC so your home address doesn't show? I'm not sure what you mean on a third party in another state, Kim. So I'm going to say that if you register in another state, you still have to register for an entity doing business in California. So that's not going to do you any good. Now, in this, I want to also mention that the home address does show on the document, but it's not like it's Googleable. It's like a bank account. You can't just Google it. You have to know to go into the government database. You have to know the incorporation number. You either have to know that or the exact name to pull up your incorporation documents to see the home address. So it's not like it's out on the internet. I don't want to make it sound like that. It's not the case, right? But it really comes down to you have to have a physical address. So you use a home address, you use an address that's physical, you rent space that's physical. And once again, please note, here's my fine print. I'm not a lawyer. I'm not saying this counts or that counts. What I'm doing, and you could see from the people who are asking, is that, there's all these weird situations. I guess I would end on this. The internet, which I love virtual. I love all that. Don't get me wrong on this. I love it. But it has created these weird questions that there's the law and then there's the interpretation of the law and how is it going to be seen. And with the virtual offices and everything, it creates a whole new level of complexity, right? So I'm just saying that this is kind of on the book still because the reason I talked to just a lawyer associate, as I said, hey, I'm seeing a lot of people using these, like physical addresses, like a mailbox has a physical mail, et cetera, has a physical address, but it's really a PO box. Has the law changed? Am I not aware of something? Because I knew the law from some time ago, and I thought, well, maybe the law has changed, and I just don't know because I'm seeing people use it all the time. And he's like, nope, the law has not changed at all. So that's how that question came up, is I was seeing it more and more. So once again, it's just some more inside tips for you to have an awareness about. The SBDC doesn't have a list of attorneys who work with small businesses that they recommend that I know of now. The individuals advisors may be, so there's no like go on the website, here's a list and here's all the small businesses that lawyers that they recommend. So no, there's no main place you can go to get a list. Sometimes people might refer or have they got to refer 3 people. Some people may refer, but there's no standard list. And oh my God, I thought to myself, okay, we're going to talk for 10 minutes and probably call it an early day. It is a full hour. And I don't even know if I answered all the questions that are being asked. So, it's so funny, Sadie. This happens all the time. I only do these Ask Lori's like every once in a while as fill-ins. And every time I do, they are so popular. And Lauren used to tell me that. They go, the audience wants more just Ask Lori's. We have more Ask Lori's. And I never do that. And I always say I'm going to. So I guess, guys, you're telling me you want a few more Ask Lori's. Is that the truth? That you want a few more?
We're still rolling in, and like I said, we were like, my favorite is that you gave me like, well, here's some questions just in case you need to give me some. I was like, a while ago, I was like, I don't even need to look at that email anymore. I'm like, we're good.
I know, I did. I sent this to Sadie. I go, well, we may have nobody ask questions. Here's some questions you can ask if nobody asks.
I was like, this is going to be the day that I talk the most. It's like the opposite.
I did. I said, Sadie, you're going to have to be present. You're going to be talking throughout this, asking me a bunch of questions. Look at Tara, maybe monthly. Well, it's so funny because I used to do that. I used to do the Ask Lori sessions once a month or so when I first started the show. And then I got it in my head. You guys don't want to hear from me. You want to hear from the guest. And so that's where I stopped doing it. Okay, Sadie, the audience has talked. We are going to have more Ask Lori's because all we talked about was legal stuff today. And I was going to, some of the questions that I had, already pumped into the system was, what do I see the biggest challenges for small companies? What companies and industries do I see are doing the best right now? I had all these really cool questions that we didn't even talk about. So we're going to have to hold on to those for next time. So
it's for our next AMA.
That's what we're gonna call AMA. Okay, that's what we'll do. So I promise you guys, I'm gonna get another Ask Lori, maybe August, because I think I got the last week in August. I haven't booked yet, so we'll get some more Ask Loris on. I guess you do want to hear from me after all, and it is my pleasure to answer all the questions. And once again, I'm not a lawyer. I'm speaking to what I know and what I don't know. That's the one thing is I always find that when people tell me this is definite and this is what they know and I should do this and they didn't ask a whole lot of questions to know, I don't ever trust it. I always say this is information. You need to find out more. And I always tell you guys a lot, take your power back, guys. Take your power back. You've got to know these answers for yourself. And you just have to, dig through a whole lot to find the truth. But you can tell from the manner in which somebody answers the question to the knowledge they have. That's kind of our inner tools that we have that kind of let us know if we're being told the whole truth or not. Okay, I want to end by telling everybody to have a wonderful weekend. I think a lot of you have Friday off, some of you don't. I know that, but some of you do. And I think it's a good time to catch a breath. I know for me it is. It's been a really busy year already. I can't believe we're already, halfway through the year. And it's going to come back on Monday and we're going to be strong again. So, enjoy the things that matter. Enjoy the friends, the family, the relaxation. I think more now than ever, we really have to hold on to what is true. And what is true to me is the relationships I have with people and the relationships I have with nature, the relationships I have with animals in nature, the relationship I have with myself. I think that's what it's really all about. And let's take some time to enjoy what reality is when we enjoy the nature and the relationships with everybody around us. Sadie, any last words you got for the group?
I'm just like, wow. I mean, like there was no pause. There was literally no pause in there. I'm just like, definitely, folks, you're gonna have to click on that YouTube channel link so you can get all the information because there was a lot in there.
Yeah, I know. I can get on my rambling. I can be a philosopher as well, guys. I have my whole life. So yeah, you can ask me a question and I can start telling you my version of the philosophy of life in a very short time period. I'll tell you what, we'll have that on one of the Ask Lori ones, okay? We'll get into my philosophy of life and business and how to, and I always tell people that the goal at the end of the life, people always say the goal is to be happy, and I used to say that, and then I realized, no, I think that when you are internally at peace with yourself and the world around you, you are happy. So I've decided the goal is to just be very conscious of what's swirling around in my energy field. And if my energy's at peace and I feel good about myself and the world around me, independent of what's happening out there, I know that I've got what it takes to wake up and go through whatever that day is going to require of me. So with that, Sadie, thank you for being there. Thank you to everybody who asked fabulous questions. Oh my God, you guys asked fabulous questions. Thank you for the frequent flyers that are there every week. My heart goes out to you to be there. And anybody new to the show, welcome, welcome. And I hope to see everybody next week on another episode of Small Biz Talk with your host, Lori Williams. Now, Sadie's going to stay behind to make sure you guys get the information, my contact information. You can comment between yourselves if you're in the middle of writing. You won't get cut off. I'm going to take off. I will see everybody next week. Have a good holiday, and I will see you then. Bye-bye.
Bye.